Edward Stevenson with TimelessWall.net. In this video, we'll break down the Dow Jones Industrial Average, the Dow 30, a DJIA, whatever name you might know it by, using classic technical analysis methods, as well as attempt to explain how the Dow affects you, just as any other trader or investor elsewhere. The first item I'd like to discuss is Wednesday's trading session, where we saw volume edge slightly lower and indecision in the marketplace with the spinning top candle forming. Thursday's trading session, the market drops 144 points to be exact. As financial networks report, unexpectedly, we saw a rise in jobless claims. We knew the economic report was coming out. Somehow these results were unexpected. That's false. The truth behind these markets is they always forecast a move to the upside and to the downside. Wednesday's trading session was a clear indication of that. There was indecision as the market tried to head to the upside after a strong trading session on Tuesday with encouraging trading volume, but was unable to do so because somebody always knows in advance what's coming in the next trading session. So while it's hard to depict what the trading pattern might look like tomorrow, the day after that, the overall trends are easier to understand when you know the pivotal levels of resistance and support. So what I've done is indicate resistance with this red trend line at 10,700. I think this is a pivotal mark, and should the market break above it, I believe it will test highs from earlier in 2010 and perhaps even head to new 52-week highs for that matter. On the flip side, we have support, and based on recent price movement, it looks like we will be testing this nearby supporting trend line at 10,100, another pivotal one slightly below at 9,850, and a critical one at 9,650. Now, where did I get these numbers from? Well, if we take a look back to the latter half of 2009, we can see we had this quite essential period in the months of August, September, October, and so forth, where we formed these peaks and troughs. In other words, the market peaked, pulled back, found support, and headed back towards a new high, a higher low, a higher high, another higher low. So in other words, what I did was I based one supporting trend line off the high coming off August/September of 2009, the second September/October 2009, and the third or tertiary supporting trend line from November of 2009. Now, if you take an even closer look here at the left-hand side, you can see that while the market broke to the upside, it also pulled back and tested those supporting trend lines. For instance, with this breakout above 9,850, the market peaked at 10,100 and then pulled back and actually tested the supporting trend line, the third one that being at 9,650. What I've done now is broken this chart down to hourly segments or hourly intervals, meaning each candle represents 1 hour of price movement for the Dow Jones Industrial Average. You can see that on these two candles where the market pulled back significantly in that 2-hour period, we saw above average volume, so there was a large tendency for traders and or investors to liquidate their positions or sell. As the market began to head to the upside, we saw below average volume. So this was a sign of weakness. Of course, we want to see above average volume when the market climbs to the upside. That did not happen here, and unsurprisingly, on Thursday's trading session today, that being, the market broke to the downside and of course headed lower as a result. A bit of a longer term look at the hourly chart. This is starting to look like a bearish head and shoulders pattern, this being the left shoulder, this being the head, and of course this being the right shoulder, but this is all speculation. In any event, pointing to the fact that we may head to the downside, testing those supporting trend lines we outlined, the nearest one again being 10,100. The last item I'd like to discuss is how the Dow Jones Industrial Average affects just about every other, not every other, but just about every trader investor out there. Whether you trade listed stocks, an investor, someone who follows economic reports and looks for the market to find a bottom before he or she gets in, and plays the market in that type of fashion, or if you trade penny stocks and traders are not showing the same type of confidence they would be if the Dow was up 200 points on any given trading session, the Dow is affecting you. One way or another, trading sentiment, investor sentiment is affecting how the market is moving. This may be affecting your chances of making a profit any given trading session or investing in a particular stock because of awkward movement. So regardless of what kind of trader or investor you are, it's important that you do follow the indices, particularly the Dow Jones Industrial Average, which tends to model what's going on in the financial markets, at least in the US. As a side note, in the beginning of this video, I went over a jobless claims report on Thursday, which drove the market lower. Of course, economic reports really do drive an index as large as the Dow Jones 30 up, down, sideways, whatever the case may be, depending on what kind of economic report we're looking at. Next week, we have the existing home sales report on Tuesday and the GDP report on Friday. So look for some interesting price movement based on the results from those two reports. Of course, the market will show you in which direction it'd like to head and what those reports will look like in advance. The market always forecasts these moves, just as it did on Wednesday, forecasting the move for Thursday. Thursday's trading sessions close. Points to a lower open on Friday, but again, if we can sustain this nearby supporting trend line at 10,100, I think we're in really good shape to head back to the upside and test 10,700, perhaps break to new highs afterwards. Once more, this was Edward Stevenson with Dow Jones Industrial Average Technical Analysis. Please visit timelesswealth.net for more materials. Once more, thank you for listening.